Thank you, Mr. Chairman, and welcome to our nominees and to your families. Dr. Clarida, your views on monetary policy are well known, but another critical part of your job at the Fed will be helping regulate the big banks. So I want to get to your views on bank regulation. Do you agree that inadequate regulation of banks helped lead to the 2008 financial crisis?
I do.
Yeah. So after the crisis, under former Fed Chair Janet Yellen, the Fed imposed new rules on big banks relating to capital, stress tests, liquidity, among other things. Do you believe that those rules helped make the financial system safer?
I do.
Good. So as you know, Randall Quarles is now the new Fed Vice Chair for Supervision, the person who will be responsible for the Fed's regulatory approach toward the biggest banks. He recently put out a new proposal on capital standards. And by his own admission, when he testified here a few weeks ago, his proposal would reduce capital requirements for every big bank in the country. And that's why both the FDIC and Fed Governor Brainerd opposed this plan. So given your agreement that the new rules have made the financial system safer, are you concerned that the Fed is looking to reverse course and lower capital standards for the biggest banks?
Well, Senator, let me say that, as I mentioned in my opening statement, I do think there are opportunities to tailor regulations appropriately, but an equal priority is preserving the substantial gains in resiliency and stability of our financial system. And on any matter that would come before me as a member to vote on, I would want to be assured that we are not trading off that improved resiliency and stability in that particular matter. I can't comment on this matter because I've not studied it. I believe it's out for comment right now.
So I'm sorry, you're being, this is a hearing about you're becoming a Federal Reserve Board chair, and you haven't read this proposal that would take a significant step that, by Mr. Quarles' own admission, would reduce capital standards for the largest banks. You haven't read it, and you're telling me you don't have an opinion about it?
Senator, I'm aware of it in broad ways. I've not studied it in detail, and it's my understanding that before any final decision on that, there would need to be another vote on the matter once the comments are back.
Well, I actually am having a hard time understanding how you can sit here, how we evaluate you as a Fed Reserve member if you can't tell us how you feel about reducing capital standards for the largest financial institutions. I tell you what, let me try this another way. Okay. Most experts agree that too big to fail is still a problem. And meanwhile, the biggest banks are making huge profits and are among the biggest beneficiaries of the Republican tax bill. These banks are now spending billions of dollars each quarter in stock buybacks. So why on earth would this be the time to reduce capital standards for these too big to fail banks?
Again, Senator, I take the thrust of your observation, and I think that if I am confirmed for this position, I would certainly come to the issue with an open mind. But as I mentioned, my priority would not be to sacrifice any of the gains that we've achieved with the existing policies.
Can you just give me any reason why you think it would be appropriate to reduce capital standards for giant financial institutions that are spending billions of dollars right now in stock buybacks?
Senator, as I understand it, part of the rationale for the proposal is some of the incentives in the way that it is existing, that is implemented. But again, beyond that, I would look forward to studying it, and I agree that it would be important not to give up any of the gains in resiliency and stability we've achieved.
I will take that as no, you can't come up with a reason, but you're not telling me you will commit to keeping capital standards high. Let me ask one more question. Can you identify a single Fed rule on capital, on liquidity, on stress tests, or board member obligations, risk management, anything else that you think should be made stronger than it is right now?
Well, Senator Warren, I think in the area of stress testing, I think it is vital. I think it's a crucial part of our system right now, and it's my understanding that the stress test exercises do take into account the loss of a particular institution in stress scenarios. And if those stress scenarios were to be more damaging, then the capital standards would be raised as a function of the stress.
So I'm sorry. So are you saying that you think the rule on stress tests should be made tougher?
No, I'm saying that the stress scenarios that are...
Okay, but I'm sorry. Let me just be clear what my question was.
Yes.
There's a whole range of regulatory issues. Capital standards, stress tests, obligations of board members. I'm asking if you think there is a single regulation that the Fed now has in place that ought to be made tougher.
And I don't have one for you.
You don't
today.
have one. Okay. So look, Dr. Clarida, for a long time, leaders at the Fed seemed to think that the only thing they needed to worry about was monetary policy. But as we learned in the 2008 crash, an equally important part of the Fed's job is regulating the giant banks. The defining economic event of the last 50 years was the 2008 financial crisis. And as Alan Greenspan later admitted, it was brought about in part because the Fed didn't do its job on regulation. I am concerned about your lack of background on regulatory issues, and I am concerned about your unwillingness today to support strong capital standards for big banks. So I'll be following up with written questions. Thank you, Mr. Chair.